Hi, my name is Alex Carlucci with GustanShow.com. You're sitting at your house, you're renting. Do I buy? What do I need? How much can I afford? A lot of things going through your mind. So let me give you an idea. It's not as bad as you think it is. Let's say you're looking to buy a $200,000 house. You need at least 3.5% down, so that's $7,000. The rest of it we can get covered and credited to you. So that's the good news. It's not you need $20,000 to buy a house. If you buy a $100,000 house, it'll be $3,500 you would need, because we can get the closing costs credited to you by the seller with seller concessions. So keep that in mind. It's not as expensive you think to get into the house. Now you're wondering, how much do I qualify for? That's going to require you talking to a professional like one of us here at GustanShow.com. So to give you a skinny on it, you can do your own analysis. It's about 50%, just to make it easy, of your gross monthly income. So if you make $60,000 a year, that's $5,000 a month. You can use $2,500 of that to apply to all your monthly debts and to your new mortgage payment. Now, calculating your new mortgage payment, you can do online. It's a good guesstimate. It's not accurate because you don't know the rate. It sometimes misses homeowners association dues. It doesn't get the PMI factors right. It's a good estimate. And when it comes to your debts, you should know your monthly debts. There are some tricky things because there are collections we have to hit you for 5%. If your collections are less than $2,000, we don't have to hit you for 5%. If you have charge-offs, there's different rules on when to hit and when not to hit for charge-offs, but usually charge-offs don't count against you. And when it comes to student loans, that's when it gets more complicated. On the conventional side, we can use what's called an income-based driven repayment plan. And when it comes to FHA, we can use the extended standard program to reduce that 1% that they're going to hit you for if you don't have a payment plan. So calculating your debts could be complicated, especially if you got student loans, because we can actually get your payments reduced. And when it comes to your collections, you may not know the rules exactly. And sometimes when your car payment's less than 10 months, we can exclude it. Or if you have an installment loan that has less than 10 months, we can exclude it. There's rules. It's 5%. If it's less than 5% of your gross monthly income, we can exclude it. So keep that in mind. There's complicated things to debts, but you can give yourself a basic idea before you call one of us what you may qualify for by using about a 50% debt ratio. Now FHA will go to 56%, but I don't want you to start doing complicated math. That's why I want you to call me, Alex Carlucci at GustanShow.com, 630-915-7550. Thank you.